Hey boys and girls, welcome back to Mr. Herring's 5th grade math online lessons. Today, April 3rd, we are continuing our financial literacy unit with keeping records. This is a really short lesson. It deals with two things: adding money to your account and taking away money from your account. So our objective today is really short. Today, I can identify credits and debits to learn how to keep track of my finances, okay? So we are learning how to keep records. That is what we are doing today, all right? So keeping records. Now we talked about yesterday ways we pay for things, and one of the ways we pay for things is with a check. Well, if you pay things with a check or even your debit card and you're taking money out of your account, it is important to keep track of that money that you have in your account after you've paid for something, so that you don't go to a store or try to buy something when you don't have money in your account, which would be a bad thing. So we are going to be keeping records. We're going to talk about how we add money and how we take money away from our account. All right. So some things bring in money. All right. So sometimes we add money to our account. The first one on my list here you see is pay from a job. That is our lesson from 2 days ago. Yesterday we talked about income. Okay, so pay from a job. If you get money from a job, that's your income, your paycheck. That's the most popular way we get money. All right. You being a student in school, you may still get allowances from your parents. Sometimes your family members are really nice to you and they give you money for your birthday. Maybe you have a garage sale and you sell some of your stuff. Okay, you're getting money. When you sell something, you receive money. And sometimes you're really lucky and you're walking down the street and you find money on the ground. You don't see anybody around who it could belong to, and so it's just your lucky day and you find some money. Not a bad thing, it's a good thing. All right. So these are ways that we bring in money. All right. Well, just like bringing in money, some things actually take away money. Some things take away money from our account. So anytime you buy something, you use your debit card or your credit card or your check or your smartphone or smartwatch, and you pay for something from the store, that's taking money out of your account. Okay. When you get older, you're going to either have a mortgage or a rent. And if you pay someone to live in a home that you live in, that's paying rent. That money comes out of your account. Maybe you're a nice person and someone asks to borrow some money from you. So you loan someone some money. That takes money out of your account. Maybe you're a really caring person with a lot of empathy for others and you make donations to things like Salvation Army or United Way. You make a donation, that money comes out of your account. That takes away from what you have. Maybe you're interested in taking some kind of instrument lessons. You take private piano lessons or private swimming lessons. That money also comes out of your account. It takes money away. Okay, so some things give us money when you sell things, find money, and some things take away money when you buy something or give somebody some money. All right, so this is what a checkbook ledger would most likely look like. All right, when you're keeping track of your money. So let's say the month of March just ended. The month of March just ended. And at the end of March, in your checking account, you had $120. So that is your balance that you carry forward. So right now, you start off with $120. Well, then on April 1st, you mowed the grass for your parents. And because you mowed the grass, they gave you $20. So this is a credit or a receiving of money. So this is a positive thing. Plus, when you when you get money, it's a credit. So here you earned $20. So that means I add $20. So $120 plus $20 gives me $140. Now I have $140 in my account. Okay? Well, you realize that it's April 3rd and the new video game that you wanted for a long time finally has come out. You ask your mom to take you to the mall. She takes you to the mall and you spend $30 on a video game. Well, that is a debit or an expense. That money comes out of your account, and so we have to subtract that money. So now you take $140, subtract 30, and that leaves you with $110. So now your account has gone down because you subtracted $30 for purchasing the video game. And then you go a couple of weeks, you don't have any activity on your account, and on April 16th, you get an allowance. You help out around the house, you take out the trash, you clean your room, and your parents give you a $20 allowance. Again, that's a credit, so we add $20 to our account. 110 plus 20 gives me 130. Now you have $130 in your account. Well, April 27th, you and your friends decide you want to go to the movies. Well, you go to the movies and they cost you $10 to get into the movie, and then you spend $15 on snacks. And I know that's a lot, but they're pretty expensive at the movies these days. So you spend $25. You debit or take away $25 from your account because you spent it at the movies. So $130 minus 25 gives me $105. And then on April 30th, again, your parents give you another allowance because you've done really well with your chores around the house. So you earn $20. That is a credit. So you're going to add $20. $105 plus $20 gives you $125. That's the end of the month. So the end of April, April 30th, your end balance is $125. So starting the month of May, you will start off with $125. That is more than what you started with in April. You started April with 120, so you've gained $5 over that month. You've been fiscally responsible. Congratulations. Okay? So let's review what we just learned. Credits add money to your account. Income from a job, a garage sale, you hold a bake sale, or any form of money that you receive. Finding money on the side of the street, anything that gives you money is a credit, okay? That makes your income go, or your account go up. You have more money. A debit or an expense takes away money from our account. Okay, you purchase goods or services, you buy a new video game, you get a soda from the store, you go to get a haircut, you pay someone to cut your grass. All those things take away money from your account, okay? A debit or an expense subtracts money. A credit adds money, okay? All right, guys, and that is how you keep records, all right? If you have any questions, feel free to go back, review the video, watch it again, take notes if you need to, and I wish you the best of luck. We'll see you guys soon. Email me if you have any questions. Take care, guys.